discussion is on a very recently issued RBI regulation directions actually named trade relief measures. The directions have been issued subsequent to certain measures that US president had imposed restrictions on the exports being done from India, and hence as a counter the RBI has granted certain reliefs to these exporters. Now, to understand the impact of this particular directions that the RBI has issued, so we would want to first understand who is covered under the circular. So, who all are the lenders? Will it be all banks, all NBFCs, HFCs, everyone who will be covered? And what sort of customer category will get covered under the specific directions for availing the relief?
That's a very important question, and therefore it's important to understand that the scope of the trade relief measures directions 2025 issued on the 14th of November extends to all commercial banks, cooperative banks, non-banking finance companies, including housing finance companies, all India financial institutions, and then goes to talk about credit information companies as well. I think CICs have a limited relevance because they are the ones who are actually recording the information. They are not lenders, but they are still carrying that information about financial defaults. So, issue first of all is that the directions are applicable to almost every regulated lender, including non-banking finance companies. So much so even housing finance companies are specifically mentioned there. Now the question basically is what's the overall intent of the direction? Directions aim to provide relief to exporters whose business models might have suffered disruption because of the tariffs imposed by the US president. So there's a list of items, I guess some 20 items, I guess a list that we should do. Those are items in case you are exporting those items. And I'm sure one would therefore mean that if you're exporting them to US. Because the question of disruption comes only when you're exporting them to US. Those items, then your business might be impacted. And in order to ensure the continued viability of a business, there is a moratorium expected to be granted by lenders to those borrowers. The important point: I am not in the business of export credit. I am a non-banking finance company. I don't provide export credit. Typically, export credit, for example, packing credit, pre-shipment credit, or letters of credit are mostly issued or provided by banks or method specific export credit. For example, ECGC provide export credits. If I am a non-banking finance company, I don't provide export credit at all. Why do I need to bother about these relief measures? Now, that's an important point to understand. You may not be granting export credit, but in your borrower portfolio, there might be one or more borrowers who might be engaged in exports. You might have given them business loans because the businesses got disrupted. Therefore, there might be a potential disruption in your cash flows as well. So, in order to grant a temporary relief to businesses whose cash flows are impacted, that's why these directions require all regulated entities to consider and decide applications by eligible borrowers for grant of the moratorium. Therefore, the scope of applicability, Anita, extends to all non-banking finance companies, housing finance companies, banks, as well as all India financial institutions, irrespective of whether you yourself are engaged in the business of providing export finance or not. If there are exporters in your asset, so all I need to say is that am I granting business loans? Answer is yes. In my portfolio of business borrowers, might I be having exporters who are engaged in business of exports? Well, I wouldn't know. Therefore, I'll have to wait for the borrowers to come forward and ask for relief. If they ask for a relief, I am required to follow a certain basis to either admit the relief or to deny the relief. Either of that will have to be based on a policy, and that's what the direction is requiring. That you must frame a policy around grant of the relief. So, Anita, that's the understanding. It's applicable to all regulated entities.
So what I understand is that in even if the NBFC is not extending the export credit to a particular borrower, but still if the borrower is an exporter and may have availed that credit from somewhere else,
Correct.
then it is still liable for me in case the borrower approaches me to provide.
Absolutely.
But how will I determine if the borrower, is it applicable for all kinds of exporters? You mentioned that there is a list of specific sectors, only the exporters in that sector.
Right.
Is there any other eligibility threshold that needs to be seen for?
Of course. The first question, the borrower is a business entity because you're talking about disruption of business, therefore personal loans. And that brings us to the question, why are housing finance companies included? Because housing finance companies, I guess, would be granting home loans.
Home loans.
But I'll come to that. Housing finance companies, why are they included? First point, the borrower in question must be a business borrower. The loan in question must be a business loan because I've granted a personal loan. Once again, there's no question of someone contending that my personal loan cash flows are got disrupted because of trade restrictions. So it must be business loan. Third, I must be an exporter. I must be exporter of the relevant items which are listed there. And I must establish that because of the tariffs, my business got disrupted, which means I have exports to US. Quite obviously, US exports will get impacted because tariffs have become unaffordable. So if all those conditions are satisfied, then we look at what are the eligibility conditions.
Right.
What are the eligibility conditions? A, I have availed an export credit
Okay.
from one of the regulated, any regulated entity. I
From
have
any
availed
regulated.
export credit, and that export credit is a standard facility as on 31st August 2025. I'm dating it back to 31st August. The disruption sort of became applicable from 1st September. Tariffs became applicable from that day. So on 31st of August, I have a credit facility for export business, number one. Number two, my facility with all regulated entities is standard as on 31st August. On 31st August, the facility with every RE was standard. If yes, then I can make a case that my business got disrupted and therefore I can come forward and ask for a moratorium.
Okay, so now to extend this benefit to the borrowers, what will be the immediate actionable as a regulated entity that the lender has to take? Like, how do I have to prepare myself? Any policy or anything?
So first, it might be important to understand what relief are we talking. So we are talking about primarily two reliefs. Number one, the borrower may ask for a moratorium, and therefore I might be prepared to grant a moratorium. Regulations don't say you have to grant a moratorium. Since like situation arose in COVID as well. COVID, there was an RBI measure, there was also Supreme Court order of the similar essence. Basically, COVID was a necessity. Relief was almost a forced relief. Here, the regulation, the directions talk about REs may grant moratorium. It's more like a permission that if you grant moratorium for assumed to take disruption, you would not face the wrath of the facility being regarded as non-performing asset.
Right.
So NPA treatment will not happen because you granted moratorium, that so-called restructuring. So question therefore, A, you may grant a moratorium. Number, that's one relief. I may grant a moratorium. How long? From 1st September to 31st December 2025. So it's a period of 4 months. I can grant I would say I can grant a full moratorium. I may grant a partial moratorium. I'll probably say, okay, keep servicing interest. But irrespective, I may grant a full moratorium from 1st September to 31st December 2025. Part 1. Part 2. During the moratorium period, while I may say the interest will still continue to accrue, but the interest will be at a simple interest rate. Now you would recollect that that's what was done during COVID as well. During moratorium, the interest was made from compounded to simple. But there was a compensation from central government to the extent of difference between CI and SI. The government was paying it. Here, as of now, there is no government compensation. I think it's not that large damage to the P&Ls, but nevertheless, it does say that during the moratorium, the SI simple interest will accrue, not compound interest.
Okay.
And that the money which was deferred from 1st September to 31st December, you may have it collected by way of a separate, a straight balloon, straight bullet payment, but there's a timeline for payment of that as well. That also needs to be settled within a certain time so that that amount which was deferred is paid over. It's not like deferred and converted into EMIs. Not unlike in case of COVID, where we could convert the deferred payment into EMI. Here we are asking for a separate repayment of that interest. Of course, to the extent of principal, because the principal was not even drawn down, principal did not run down. Therefore, the principal will get restored to what it was prior to moratorium. So the relief is in terms of A, moratorium, B, simple instead of compound interest during the 4-month period. Of course, it's all left to discretion of the NBFC or HFC. Discretion, however, is policy driven. The key part is that when we talk about discretion, it's not like I will take my whimsical or whim based decision. Decision is based on a policy. Policy means what? Every regulated entity is therefore required to frame a policy. Either I take a call that my borrower base does not have any borrowers in, because I am into personal lending, none of my borrowers are impacted. Therefore, I straight decide that I don't need a policy. If I indeed might have some borrowers, I can't wait to frame a policy when the borrower makes a requisition, because the relief has to be instantaneous. We are already in mid-November. The relief is talking dating back from 1st September to now, or to 31st December. So quite a lot of time has already passed. We therefore need to act quickly, and therefore the policy or the framework for granting the relief must be in place. So if borrowers put in request, I'm able to pass on the benefit. So I should therefore frame policy.
So over here, as a general, I would say specifically the kind of NBFCs that I have seen, mostly they may not have this kind of a specific product which is for exporters or for granting credit to exporters. So this will be, I'm assuming, a very insignificant part of the AUM of
Very true.
several NBFCs. Even for them, if we say that this is a specific policy, because if you are saying that it is immediately applicable and the time frame is applicable, the moratorium was to be given from 1st September till, so I will have to take immediate steps.
Quick action.
So quick actions would mean the policy has to be formulated, adopted and approved by the board as well.
Sure.
Is there a way out that I can maybe take a approach so as to put a notice on my website saying that yes, if the borrowers, if my borrowers have that kind of a exposure, they are exporters and they want to avail this kind of a benefit, they can approach to me, and once they approach, then maybe I can take steps, right?
So I'm breaking your question in two parts, Anita. First question: is it likely that my borrower base will consist of people who are into export business and whose cash flows may therefore be disrupted? First point. So in answer to this question first, I'm into what business? Let's say I'm into personal lending business. I don't need to bother about this at all. However, my portfolio segment includes, let's say, MSME loans. Today, most of the NBFCs, to large extent or to some extent,
They are
engaged in MSME loans as well.
Yes.
I might be granting so-called LAP loans, which also might be going to fund the working capital of businesses.
Right.
I may call it LAP loan, but basically the end user money is working capital.
Maybe, yes.
I might be giving business loans of any, I mean, like my corporate loans, small business loans. So if my portfolio consists of small business loans or LAP loans or MSME loans, which is why I've grown HFCs as well, home loans are not surely not impacted. They are. No one can argue that EMIs for home loans got disrupted because my business is suffering. That's not a valid argument. But housing finance companies also give LAP loans. Housing finance companies also give business loans. To the extent housing finance companies have LAP loans and business loans, they need to therefore be prepared to consider requests from borrowers to grant loans. So first point, Anita, if my portfolio consists of some business loans, I don't know XPC, I don't know whether my borrowers consist of people who are exporting to US, unless I have a complete database of my borrowers, what business they are into. In case I'm sure that none of my borrowers are exporting, well, then in that case you can record that and the board might record that our portfolio doesn't include any borrowers whose business is likely to be. But if there is a potential for borrowers to exist which might be eligible for the relief, then the next step is, do I make a policy when called for or do I make a policy now? This is almost like saying मेरे को प्यास लगेगी तो मैं खोद लूंगा. तो जब borrower आएगा तो borrower आएगा, you might need to respond quickly. I can't, for example, if I don't have a policy, that would mean for each such request I need to approach to the board.
Right.
Then the board has to take a decision. It would therefore be a unmethodical, non-systematic response. As a regulated entity, I don't think you are expected to take that kind of what do you call FSZ response. It's more has to be systemic and system-driven. Therefore, methodical way to handle the situation. Number two, there is a requirement somewhere towards the end which says on a fortnightly basis, you will upload on Daksh portal the request received and the actions taken by you. Of course, the Daksh format might probably be available by Monday or less soon thereafter. But I am assuming that the RBI will also be nudging. You'll probably find an RBI nudge to regulated entities asking them what actions have they taken. So if I want to be a good boy,
a good regulated entity will maybe take steps immediately. But is it, you mentioned that they will have to then evaluate the borrower's application. So I'm assuming this is not a mandatory relief that has to be given, because COVID was like a mandatory relief and hence the compensation from the government. This is not mandatory and hence it will be evaluated.
That's our based view, Anita, because the wording, time and again, everywhere the wording is REs may grant, not REs shall grant. But it's a question of interpretation because quite often may can be read as shall. But to my understanding, this one is for consideration of disruption, therefore consideration of an appropriate relief.
Right.
And this is more like a permission that if you grant a relief, I'm not going to tag the loan as a restructured loan and therefore NPA. A lot of it is based on NPA's treatment as well. So to my mind, this is more like an permission to restructure rather than a mandate to restructure.
And
But then the very important question once again is that on what basis do regulatory entities decide whether my borrower should actually be granted relief? Now that's a circumstantial point. I would probably have to argue or go into what are the cash flows of the borrower, how much exports the borrower was making to US, what was the gross profit rate, and therefore what was the net margin on those cash flows, how much of that export is not happening anymore now, and therefore what's the extent of disruption, therefore what's the damage to debt servicing ability, and therefore what is the ideal or optimal moratorium to be granted to the borrower, whether it needs it fully or needs it partly or needs it for the full period from 1st September to 31st December, or can I even grant him a shorter relief. So this is to be decided point, but the methodology basis which regulatory entities will decide, that is what is captured in the policy. The policy is something that need instantly, and therefore my call is that we should probably take action on this sooner than later.
And what will be the impact of granting this relief on the borrower obligations or the asset classification? You mentioned that the borrower has to be a standard asset as on 31st of August. Now, what happens to the asset classification if the moratorium has been granted and the repayment obligations of the
Good
borrower?
point. So let's first understand that the DPD clock will stop running from 1st September for the entire moratorium. Assuming granting it from 1st September to 31st December, the entire eligibility period. Then let's say you grant it for full 4 months. I'm assuming based on that. So if the borrower was whatever DPD on 31st August, the DPD clock will stop. It would stop running any further. There might be situations, for example, let's say the borrower was 60 DPD on 31st August, which means it was standard.
Right.
The DPD clock now will stop running from 1st September, but obviously minus the directions it was still running. So the borrower paid nothing, let's say on September 30th, he'll become 90 DPD and therefore will get classified as NPA.
Must have already been done.
And let's say by end of October, it definitely would have become an NPA.
Yes.
So somebody whose business indeed was disrupted, will probably see that there was a disruption in cash flows already, and therefore the borrower might have actually been degraded to a non-performing borrower. So now that we are giving the moratorium from 1st September, I will reset the DPD and turn it back to how it was on 31st of August, which means the DPD status will change from whatever it is as on date to what it was on 31st August. I'll roll it back to the position as it prevailed on 31st August, which actually might mean a lot of NPAs might become standard. Right. So that might mean going back to CICs, which is why CICs is included now. Right. The CICs also will have to adhere and comply with it, so that we will now be reporting the DPD status on 31st August if I have granted moratorium. So one of the incentives for following the relief measure is that whoever has become NPA between 1st September to now may actually be rolled back into standard if I'm able to establish that this person indeed was an exporter of the notified items.
Right. And another impact you mentioned, because that the compounded interest will not be applicable during this period. So it is simple interest. During moratorium, there is no payment that the borrower pays. How and when do I collect this interest that has accrued during this period?
So there is a stipulation for payment of interest there, that the interest will have to be separately settled. And it says the interest will be settled, I think it says by 31st.
From March
September 30th till 2000, not greater than September 30th, 2026, meaning
and after March.
From after 31st March 2026, within 6 months thereafter, the interest part should be settled. As regards the principal, because amortization of principal did not happen, so the principal will exactly be starting from how it was on 31st August. We might have to recompute the EMIs because there probably might be an extension of tenure. I'm guessing that there might be an extension of tenure for sure. 4 months were missing.
Right.
Now I can't increase the EMIs, therefore it would probably be elongation of tenure by 4 months. Interest will be separately, interest for this period will be separately settled, which means logically it would be extension of tenure by the moratorium period as well. Right. Does it require a separate contract or amendment of contract with the borrower? I would say no, because this is more like a regulatory prescription. I'm trying to pass on a benefit. So I can simply send a revised note of the revised schedule and the revised tenure, and not go for an amendment of the contract as such. This is something that we advised during COVID as well. COVID was global, all over the world
Right.
disruptions happened. We advised that there is no need for a separate agreement. You can simply do a what do you call a one-sided notification to borrower. So that's the impact of that's how you actually pass on the benefit during the month. Anita. This might be minor impact on the IRR or APR. Why? Because during those 4 months, it's simply
It's not
charging
compound
same,
interest.
not minor. I wouldn't
Minor
say it's
interest.
great impact, but minor impact.
I think thank you, sir, for the explanation on
Right.
this
So I think let
directions.
everyone take a call on whether at least you need to get into the policy making job,
Right.
because many of the at least larger entities might have business moreovers, and you might therefore need to evaluate whether they might be among that large population of business moreovers, they might be exporters, and therefore at least on the policy front you need to
Yes.
frame a policy. This is not something that the compliance officer will like to decide for himself. So you would rather like to appraise the board and let the board take a call on whether we need a policy or simply do as like you said, cash like this work for denge. Well, that approach works with the board. I would not suggest that, but that's up to the board of directors to decide.
Right.
I think with this, this is one more of RBI directions we covered today. And please stay tuned and keep watching. And thank you for watching this video and keep watching more of this. Please join our YouTube channel if you are not subscribed already. We have almost like 10,000 subscribers already. So please do join. Most welcome. And do join our WhatsApp channel as well.
Right.
With this, thanks everyone and thanks Anita.
Thank you.